it's time for our monthly STAX report. This is proprietary information. It is special just to Charles Schwab. Joe Mazzola, head trading derivative strategist at Charles Schwab, is with me now because we can't wait for this. I mean, this is so important. But what's very interesting is you have some big perspective on the actual levels of the latest STAX number. Please share.
Hi. Hey, Nicole, how are you? And thanks for giving me some time here. Well, yeah, as you mentioned, it's proprietary and it is a measurement of what our clients are actually doing, not just what they're saying. And we release it every month, and here's the highlights for May. Basically, it came down a little bit, so it was about a 3.6% move down to 39.68. It's the first time we've been sub 40 in about 2 years, which is interesting because there's a bit of divergence between what the STAX is saying and then what you saw with the S&P 500. And I guess the best way to explain that, Nicole, would be that there was a pretty decent rotation that occurred out of maybe tech and communication services, so some of the higher beta sectors, and a little bit more into some of the lower beta ones, specifically healthcare. And I was surprised to see the number 2 buy on our list this month was UnitedHealth. And I can break it down, given the data that they show me, I can break it down weekly. And it looked like that week of, where we hit our 52-week low in UnitedHealth, clients stepped in and bought the dip. So it really was a month of dip buying in some of the unloved names and some trimming in the strength of some of the names that normally appear on the buy list. Nvidia, it's probably been number 1 or number 2 on our buy list for the last 2 years. This is the first time that I've seen it as the number 1 sell for the month. And a lot of that occurred kind of post earnings after it had its little move to the upside. You saw clients trim into that strength.
I do want to talk about some of the ETF fund flows that you saw actually going into ETFs. I mean, that brings a little bit of a diversification. Maybe people aren't in one stock, and that may be why people like ETFs. But let's talk about, since you prefaced it with the UnitedHealth, and that's what people bought. Let's talk about what they bought and what they sold. Let's go through that list.
So number 1 on the list was Palantir. Nicole, I'm wondering whether or not this is kind of starting to replace Nvidia as kind of a retail favorite because it was up 5 weeks straight. Not necessarily the stock price itself, but in terms of our net buys on a weekly basis. Clients use the pullback in Palantir after its earnings as an opportunity to kind of buy a little bit of a dip. It wasn't a huge move, but enough. And they use that as an opportunity to kind of scoop some up. I mentioned UnitedHealth was number 2, and number 3 was Amazon, taking the 3rd place. On the sell side, Nvidia was number 1, Microsoft was number 2, and Meta was number 3. And you mentioned something about the ETFs, and I think that's also important as well. That's been a bit of a shift in the dynamics that we've seen from our clients recently, is kind of movement away from some of the single equities into a little bit more diversification with the ETFs. That also, to a certain extent, Nicole, explains maybe some of the lower beta, right? Because a lot of times those ETFs, whether they're the broad-based ETFs, they tend to have a lower beta than some of the individual names themselves.
Understood. And the part of this that worries me is that sometimes, you have the big houses, they have the big money, smart money, whatever you want to call it. And then you have retail traders who are sometimes chasing. And there may have been some chasing happening because if they're selling names that in fact did well, it's sort of a disconnect. I mean, you had the Palantir, they bought Palantir, UnitedHealth, Amazon, Tesla, Apple. They sold, you said, Nvidia, Microsoft, Meta, Broadcom, Disney, Micron, and Intel. Did they miss the boat a bit, and did sentiment maybe start to improve?
I think that's possible. I do think that anytime you're trying to pick the high, it's a fool's errand, right? I mean, you never know what the high is going to be. But I think trimming into strength makes a ton of sense when you have the V bottom that we saw in April. Remember, even though the STAX was down in April, on a weekly basis, what we saw a lot of buying on April 8th, right? The day when the S&P 500 put in its kind of near-term bottom. So there was a lot of retail buying at that time that carried forward, basically through middle of the month. And so retail seemed to buy the dip a little bit more quickly than we saw on the institutional side. And my theory is that what we're seeing right now is it's a little bit of a catch up now for institutions that are maybe extending these buys as they're trying to boost their end of the quarter performance as we move into the end of the quarter here in June. What I will say is this in terms of FOMO, if that's kind of what you're getting at, is one of the things that I look at for some of that, it would be looking at some of the upside call buying. And it's a different environment now than we were last year at this time, when I think, I probably was on your show calling that out, saying, hey, that's something that's a concern of mine, is we're seeing a lot of this upside call buying in addition to the stock buying, as people are really trying to lever it up on the way up. I don't see that right now. If anything, I see a little bit more kind of reserve in terms of what we're seeing with the implied volatility curves. It's basically showing a bit of a wait and see approach from clients, from retail in general. And as you mentioned, with sentiment, that was something that's interesting too, because not only do we look at the actual activity as you get in the STAX report, but we also do a survey along the way. And what we saw with client sentiment this time is it had moved from a lot of that bearish sentiment that we saw at the beginning of April. It's now a little bit more neutral, but there still is uneasiness around kind of some of the shifts in trade policy that we're seeing, concern around inflation data. And then one thing I found really interesting was this idea that clients are really paying attention to fixed income volatility, and that's something that's on their radar right now.
Yeah, and I think you made a good point about folks trimming. A regular person may say, as you wrote here, the 6,000, sometimes it's a psychological level. Like, look, I came back from 5,000 or 4,800, and I've already done pretty well, and I may sell out and take some profits. And that's great if you're doing that. And, you're not a loser if you just made some money, whether you made 4% or 14% or 24%. You made something, and that's a good start. So 6,000 being a psychological level excites people, but may also be sort of, we went up too fast. And you said the RSI showing that divergence may also, if someone's looking at a technical chart, may say, I don't know how much support we have above 6,000, right?
Yeah, no, I would absolutely agree with that, Nicole. And I do think that a lot of our retail clients are students of investments. I mean, with everything that we offer, whether or not it's the Schwab Network and your show, or what we're doing with Schwab Coaching, or some of the live events. We've got one coming up here in Miami on Friday, the Miami Market Drive. A lot of our retail investors have become much more educated. They really pay attention to the charts. They're looking for opportunities. So when they see when they see pullbacks, like I said, that UNH one was really, really interesting to me, because not only did they buy UNH, but they bought it the week that it hit the 52-week low. So that, that's where we saw the most inflows into a stock like that. Same thing with Palantir. Palantir, the most inflows just happen to coincide with the pullback on the earnings. So they are becoming a little bit more tactical in really how they're allocating those funds. They're looking for opportunities. And in doing so, they're also looking for opportunities to take a little bit of the risk off the table. And they're not doubling down like we saw last year, as I mentioned. They're not buying stocks and buying calls. If anything, we're starting to see kind of a flattening of that curve. And we're just starting to see, like I said, a little bit of a wait and see approach. And it makes sense, kind of given the fact that here we are 4 weeks away from, think about this, the expiration of the trade, not resolution, but at least the pause on the tariffs. Yeah. And then we also have the budget bill coming up by the July 4th. So there's a lot that can happen in the next 4 weeks.
Yeah, July 9th for the tariffs, July 4th, as you noted. And you did also note that folks were nervous about volatility overall. And now they see the VIX below 20, so maybe that gives them a little bit of solace. But they do get nervous overall about the big picture. Joe Mazzola, head trading derivatives strategist at Charles Schwab. It's always so great to have you on for this special STAX report. And also nice to hear that sentiment improved from being somewhat bearish in April to more of a neutral stance of late. So that's some good news there. Thank you.